Awesome. Hey, everybody. Thanks for joining part one of four of our Strategizing Bootcamp presented by Comerica. This is session one here with Kevin Watkins with Comerica Bank, here to talk about small business banking services. Really excited about this. So, without further ado, Kevin, I will let you take it away. And then, just as a reminder, I'm going to put it in the chat as well. We'll save Q&A for the end, but feel free to leave your questions in the chat and we will get to them when we're finished. So, thanks, Kevin.
Okay. Thank you, Andrew. Very much appreciated. Hello, everyone. My name is Kevin Watkins, and I'm one of the external affairs managers here at Comerica Bank, a division of Fifth Third Bank. So we are going through a merger between Comerica Bank and Fifth Third Bank. So our next major milestone will it's considered Customer Day One, and that's going to be over the Labor Day holiday. So at that time, that's if you are a Comerica customer, you'll start to get more notifications, more insight around the merger process, systems, software, how all of that's going to be integrated. We are currently in the process of coordinating all of those activities. And yeah, we are excited for the future. That is for sure. I've actually been in banking for roughly 25 years. I've been at Comerica Bank for 21 years this year. And primarily my time at the bank was in the retail bank. So I was a banking center manager, and my job was to help businesses as well as individuals to meet their financial goals. So, this particular session is going to discuss small business banking services. And as you know, you all are entrepreneurs that are listening to this or aspiring entrepreneurs. So, you need as many resources as you can to help you run your business effectively and efficiently. So that's essentially why I'm here to share this information with you. So banking can be as simple as possible. That's really what our goal is with coordinating a lot of these financial education as well as technical assistance events. Of course, we are thankful for our partners at Central Michigan University Research Corporation for even having a series like this and partnership opportunities like this for our small business community. But essentially, we want to share as much information with you as we can, so you are able to make better financial decisions. You are able to help your business grow and achieve and get to the next stage of where you are trying to lead. So with that being said, let's get right into the presentation. All right, so these are just a few of the workshop goals that we're going to have. And just so you know, it is going to be a little bit of a shorter presentation, uh, just based on the subject matter. That's how it works. So yeah, some of our goals, we're going to identify some common financial products and services, describe important factors to consider when choosing a financial institution, and then also explore the value of building a relationship with a financial institution. So let's get right into it. All right. So let's go to the next slide here. All right. So why do businesses need banking services? So, uh, I know this isn't traditionally a interactive session until the very end, so I'll just come up with uh, you know, a few answers, if you will. So, why do businesses need banking services? I mean, there's so many different reasons. Businesses have clients, they have customers, so you have to be able to accept payment from them. If you accept cash, you have to take that cash into the bank and deposit into your account. If you accept credit cards, debit cards, you have to have a method of capturing that information. And even like on your website, you have to integrate all of that so that you are able to be paid for your services that have been rendered. You think about paying your vendors, your suppliers, you have to have a conduit in order to do that. So that's where like a business checking account will come into play. Um, you need to pay for items, right? So of course you have your business checking account, but there's various ways you can do that. You can pay via wire, you can pay via ACH, which is short for automated clearinghouse, or essentially just an electronic transfer. There's so many different ways and things that need to be done, but essentially you need to accept money and you need to pay money out. And in order to do that, you are going to have to uh, utilize services from a bank or a financial institution in order to do that. When you think about growth, you may be in the market to borrow money. So you will once again need the services of a bank in order to take advantage of those types of opportunities, right? Um, so yeah, those are just a few answers that we have of why businesses need banking services, but essentially it comes down to being able to accept money, being able to distribute money. That's at its core principle. Those are really the main two factors, in my opinion. All right. So let's go off to the next slide. All right. So when it comes down to choosing a financial institution, you really want to ask yourself some of these basic questions. What are your business's unique needs? Does the financial institution have a good track record, if any, of providing services to small businesses? How important are non-financial considerations? What fees may be associated with the financial institution's accounts, products, and services? And is the financial institution insured? So those are all very good questions. So for the first one, what are your business's unique needs? uh, Really a best practice is going to be reviewing a bank or a credit union's products and services, as well as, how much they charge for fees. When did they charge for overdraft services? You really just want to become well versed. And, you can look this information up on their website. You can go in and talk to someone. I strongly encourage you to first do your research online, maybe even talk to friends, family, associates, get their recommendations. And, once you've narrowed down a few different banks that you'd like to try, I encourage just walking in, speaking to someone in the management area, and just considering these questions, asking them all of these questions. And then once you begin to ask these questions and you hear their answers, you really want to think a few different you want to think a few different things to yourself. First of all, are you liking the answers that they're giving you to these questions? If you walk into a bank and they say, yeah, we charge all of our business owners $20 a month for the service, no matter how you use it. We charge for X, Y, and Z. You may not be too thrilled with that, right? You might say, okay, well, I'd like to see what other options are out there. So that's one thing. You may not like what they have to say. You may like what they have to say. And then second, the individual that you speak to, you want them to be knowledgeable about their bank's products and services. Because if you have an issue, you want to know that you are going to be well taken care of. If you walk in and you have a problem and you need some assistance, that's really one of the main benefits of banking with a brick and mortar bank. There are online banks that are available. And with these online banks, there may be some advantages to them as far as pricing goes, or services and fees and things like that, because they're able to not have such a high fee structure because they don't have the same amount of overhead as a brick and mortar institution. They may have less employees, they may have less rent or mortgage cost, or commercial mortgage costs. But the main benefit of walking into a brick and mortar location is you have someone that you can talk to. You should have a dedicated individual that is well versed in those business products. So, once again, like I said, if you walk in and they're not too familiar with their business products and services, they might be new, and that's understandable. Well, I would politely ask them to find someone that understands this information. And, if they're not able to do so, that might not be the right place for you. So first of all, do you like the answers to these questions? If you don't like the answers to these questions, are they at least knowledgeable, about what their bank offers? So you definitely want to think about all those different things, as you are considering your business's unique needs. You also want to think about like ATM locations, online or mobile banking, transaction restrictions, as well as currency requirements. When you think about banks in general, banks are going to have more ATM locations. They're going to have more locations in general than a credit union location, right? So that's something that you want to keep in mind as you are out and about in the community, handling your business. Are there going to be enough locations where you are going to be located to where that will help you? You also think about the restrictions, currency requirements. You really want to fully understand all of this information before you open the bank account, because we don't want any surprises, right? We don't want to walk to our mailbox and we get a statement and you see a whole bunch of fees, and we weren't aware that we were going to be charged any fees. You just don't want that in any way, shape, or form. So you want to be well versed on what this account is going to look like before you even start utilizing it. All right. Does the financial institution provide services to small businesses? So if yes, they do, what is their track record? Are people that utilize those services, are they satisfied with the service and then also the product that they are using for their small business? So it's really a best practice to choose a financial institution that they have a track record of helping small businesses, and they also have products that are tailored for your business at your specific business stage. And then once again, ask other business owners for their experiences with their banks or their credit union as well. That's going to be beneficial to you. You're really before you open that bank account, you are in fact finding mode, and you want to find the best answers for your organization. How important are non-financial considerations? So, you think about a few things like customer support. Are you going to get adequate customer service? If you go into a brick and mortar location, what's their parking like? Are you going to be able to park and get out? Do you have to pay for parking? So those are really going to be some questions you'll want answered. And then what other relationship management tools does that bank or does that credit union offer that is going to make banking more efficient for you? I'll get into this a little bit later, but you have treasury management for example. And when you think about treasury management, you just want to think once again about paying your vendors or your suppliers, or also receiving funds from your customers, your clients, kind of outside the cash and debit card and credit card range. So, for example, when you think about treasury management, there is a service is called remote deposit capture. And what they could do is if your business accepts a lot of checks, you can essentially like scan your checks through this machine remotely, and you don't have to go into a bank or a banking center and walk in, wait in line, deposit those checks, and then walk out and then go back to your place of business. You can do it all remotely. And even beyond treasury management, you can even do a lot of that as long as it's not too much, because it can become cumbersome if you have 50 checks, but there's a mobile banking app, and you can take pictures of the check front and back and have the funds deposited into your account. Here in 2026, there's so many different ways to make banking convenient and easy for you. But once again, not all banks are created the same. So you just want to see what services are being offered, and you really want you want to bank as efficiently as possible, because you're running a business, your time is valuable, and you just want to be able to do things the very best way so you can get back to running your business. Um, Fees. Are there any fees that you might incur while you're doing business with the bank or the credit union? So you definitely want to learn about fee structures, take a look at the fine print on the product offerings, etc. Um, so I do know when you think about banking at a Comerica bank or even a Fifth Third, both institutions currently do offer free checking accounts for small businesses. There may be a restriction on the number of transactions you can do, to my knowledge, and I've been out of the banking center world for about 4 years now. But at Comerica, it's about 75 transactions you can get free for the month. And at Fifth Third Bank, it's around 100 transactions that you can do for free during the month. So, as you are taking the assessment of what type of an account to open, or even which bank or credit union to open it with, you want to consider that. How many transactions are you doing on a monthly basis? And will that fit into the particular account that you're going into? And then once again, that's where that dedicated banker is going to come in, and you are assessing their skills, their abilities. Um, are they able to guide you in the right fashion? Are they asking you these types of questions like, well, how many transactions do you anticipate doing on a monthly basis? And then recommending the appropriate products and services. All right. So that's just something else that you want to consider. And then is your financial institution insured? So federally insured banks have coverage through the FDIC, and FDIC is short for Federal Deposit Insurance Corporation. And or for credit unions, they're insured through the NCUA, which is the National Credit Union Administration. So when you look at certain types of accounts, those accounts are insured up to $250,000 per depositor per account. To my knowledge, that primarily is going to be for personal accounts. But I'm just going to do a little bit of research um, while I'm doing this presentation. So hopefully you can bear with me while I'm doing this. Yeah. So yes, and it does say so $250,000 per bank. Um, and it does cover business accounts. So corporations, partnerships, LLCs, and nonprofits that are engaged in independent activity. And these business deposits are insured separately from personal accounts. All right. So you definitely want to consider that and see this insurance kicks in if a financial institution were to become insolvent. So, if they were to cease operations. So, if there's a bank where you bank and then they were no longer in business, essentially like the FDIC or the NCUA would step in and they would credit each individual depositor up to $250,000. Or whatever's in their account, whichever's less, right? So it's really going to be a strong recommendation that you do bank with an institution that is federally insured. All right. So you definitely want to consider these factors, seek out the opinion of other business owners to find out their experience with their financial institution that they bank with. Okay. So let's go to the next slide. So here are a few common types of accounts. So once you have chosen a financial institution, like I said, you want to look online, talk to the representative, talk to other associates that you know that bank with that organization, and just learn as much as you can about the fee structures, about how the accounts work, and choose the one that's going to be best for you and for your type of business. And depending on the industry that you are in, um that may have a uh, uh that may help to guide your decision as well. All right. So when you think about like a small business checking account, that's going to primarily be some of those free options that I gave you. How I said that Comerica as well as Fifth Third, they do offer small business checking accounts, and they do have a free option. Now, if you need more transactions, they also have options for that as well. There may be a fee involved, or the fee may be waived if you keep a certain amount of money in that particular account. So I know for Comerica, there's a basic business checking account, no fee, uh, and you get 75 transactions for the month. And I'm looking up Fifth Third's now. So Fifth Third has a business checking. There's no monthly fee, and you get 100 transactions in that account. Now, if you need to go beyond that, so on the Fifth Third side, you have a Fifth Third business premium checking account, and there is a monthly service charge on that. But if you keep a minimum balance of $25,000, then there is no monthly service fee. You don't have to worry about that. And then instead of 100 transactions, you get 500 transactions, right? So you really just need to assess which one is going to be better for you. How many transactions do you actually need? Are you able to pay the monthly service fee? Or if you are able to keep the balance that's required to waive that fee, will that make more sense for you? Then you get into the commercial checking accounts. The commercial checking accounts, um, a lot of them, what you may have to consider is there may there may not be a certain balance that's required to waive the fee. But there's something called like an earnings credit offset. And based on your balance, you can get a earnings credit, and that can offset the fees, right? So you may be charged a certain amount of money, per deposit, per withdrawal, per like each particular transaction. But based on your balances, it may offset any fees that you may have. So if you fall into that particular category, you'll want to make sure that the banker is well versed in those areas and can explain very clearly and succinctly how you can waive your fees or what your fee structure would look like. All right. And then you get into like savings accounts and money markets. And money market is essentially just a fancier savings account. You most likely will get a higher interest rate on the money market account, but your balance requirement will be a little bit higher than on the savings. Okay. So, and also on a money market account, you can write a certain number of checks per month, but a savings account, you can't do that. You can't write checks off of a savings account. Then you get into certificates of deposits and also payroll accounts. It's really going to be a best practice if you are paying your employees to have a separate payroll account, because when it is time for your employees to be paid, it's going to be easier to reconcile if you have that from one dedicated account instead of commingling that with your operating account. The money that you're paying your bills with. So if you set your payroll aside, you may have a payroll company that you use or you may not. But just having it set aside and separate, that's really just going to be a best practice for you to make sure that your employees are paid. And then oftentimes some financial institutions, they may offer payroll services as well. So, you can feel free to shop those as well as trying to see which service is going to be, just more convenient for you. Okay. And certificates of deposit, that's essentially where you have to keep a certain amount of money in the account for a certain amount of time. It might be 3 months, 6 months, a year, 2 years, 3 years, whatever it is. Traditionally, the longer term you had, the higher interest rate you were going to have. So traditionally, like let's say you had a 5 year CD rate, that's going to be higher than a 1 year CD rate. Currently, that's not necessarily the case. I've seen some CD rate sheets or just deposit rate sheets where, a 5 year CD term, it's not going to be as high as like a 1 year or even like a 9 month. So you really just want to see what makes the most sense for you, but know on a fixed rate CD, you have in there for the full duration of the term. And if you don't, there's a penalty that you'll have to pay. Um, like let's say you take out a 1 year CD, you need to take it out before the 1 year. The penalty might be 6 months worth of interest, right? So you will end up foregoing 6 months worth of interest. And in some cases, that money might be taken away from the principal. So, let's say you started off with $50,000, you do a 1 year CD, you're going to get a certain percentage rate. If you cancel before that 1 year is up, then your penalty may eat into that $50,000 principal. So you'll just want to really fully understand how that works from the financial institution's perspective to see, if you do need to cancel early, will it eliminate some of your principal or not? All right. So next, we'll go into the online banking services that are offered. And these types of accounts, these online banking services, these are going to allow you to access your account, either via computer, your mobile device, or tablet, as well as the remote banking services. And remote banking services, that's similar to that remote deposit capture I was telling you about, where you can deposit your checks via a machine where you scan all of your checks in. And that's essentially like a treasury management service. So, um, when you look at some of these options, there's like a lot of different things you can do through online banking, and I'm sure the majority of you are familiar, but I'll just review real quick. So of course you are able to pay your bills either online or through your app. You can pay bills on there. You are able to pull up statements for the most part. You can make deposits through your check. Of a check, you can take a picture of it front and back, and then the money will be deposited into your account. You may even be able to communicate with your financial institution directly through that app or through the online website that you go to in order to access your account. And then once again, with the remote banking, uh, that's really where you don't need to visit an in-person a branch or a banking center. You can call, you can email, you can text an employee of the bank when you need assistance. And then some financial institutions might allow you to use remote banking for automated lockbox services, like maybe setting up a unique address for your business, like a PO box, or also receiving payments directly to this address from your customers. And then also maybe having your financial institution process those payments and record those transactions for you. All right. Now, a lot of people have concerns about privacy as well as safety of their information when banking online or on a mobile device. So let's take a look at a few different ways that you can protect yourself. Oh, yeah, so that one is actually going to be on the participant guide. So yeah, I'll share the participant guide once we get to the end. But understanding identity fraud and protection is really going to be very important if you choose to use online banking. Most financial institutions, they already have some sort of a standard safeguard in place for you. So they're going to make you set up a login, a password. They might even have a like third party authentication where they'll send you a text message and then you have to enter in that code that they sent you in order to access your account. So it's really just uh, best practices to utilize all of the fraud protections that are available when you are using your account or when you are accessing your account either on your mobile device or on your laptop, like let's say you're using public Wi-Fi, it's really not recommended to use public Wi-Fi alone because anyone that is on that network, if they are computer savvy enough, they may be able to look and see what you are doing by utilizing that public Wi-Fi. So if you are using that, I recommend using a VPN or a virtual private network. A VPN is going to allow you to mask your IP address, and your IP address is essentially like it's a fingerprint for every time you access the internet. So if you access the internet on your phone, that has a specific IP address. If you access it from your work, that has a specific IP address. If you access it from home, that has its own separate IP address. But using a VPN is going to mask that. And if there's any fraudsters, hackers, they're not going to be able to see that information, and they won't be able to have access to your account. It's just one additional layer of security that you will have. All right. Um, so you can also authorize multiple people to access your business accounts online. So some benefits of these services include processing payments and transfers at the click of a button, transferring funds via direct deposit or electronic, and credit processing, making wire transfers to vendors and other businesses, paying your employees via payroll services. We talked about viewing the front and back of checks scanned by the financial institution. And then I did mention the remote deposit capture as well. All right. So let's get into the business debit and credit card or the business. Yeah. So first we'll do the business debit cards. So businesses can use business debit cards to pay for various expenses. Debit cards are directly linked to your business checking account. And when you use them to make a payment or withdraw cash at an ATM, the transaction is immediately withdrawn from the account. Debit cards do offer some fraud protection, particularly if you report a stolen card before it's used. You may be liable for all or some of the stolen money if you wait too long to report the theft to your bank or credit union. So that's why it's very important to keep your eye on your bank statements. And if you use online banking, check your account every single day so you know what's going on. You really just don't want to be caught by surprise. I was helping one of our community partners. Unfortunately, she had a situation where there was several transactions that hit her account that were fraudulent. But it happened like on a Friday, and Monday morning she was in the bank. She was already on it. So if you are able to do that, it's going to be much easier to get your money back versus if you wait, a month, 2 months, 3 months. So please check your accounts every day. If there's a fraudulent situation, let the bank know so it can be investigated right away. All right. Now, pros of using your business debit card early. You can only spend money that you have. Uh, you can access cash through ATM machines. You can protect your card and account with a PIN number. There will be lower fees than credit cards, and you don't have to worry about interest at all because the money's coming right out of your account. There are a lot of scams going on right now with business debit cards, so you really just want to make sure that you safeguard your card. You never want to write down your PIN number on your card or keep it in your wallet. I've seen people that have had their wallet stolen and they have kept their PIN number in their wallet and they had fraudulent transactions. And unfortunately, they weren't able to recover their money because they did not truly safeguard their PIN number and their debit card. You have to do both. Uh, you look at some cons, it could deplete or jeopardize your account balance. So if you know that you have to stay above a certain dollar amount, if you're using your business debit card, if you're not keeping track of your balance, you run the risk of going below that certain dollar amount, and now you're going to get a monthly service fee because you didn't keep your account balance above that designated minimum. So that's something you have to consider. Uh, the fraud protection is limited, especially if money is withdrawn directly from an ATM. And I gave you the perfect example of how it is limited, right? The cons, your financial institutions may not have enough ATMs located near you. There may be fees for withdrawing money from ATMs that are not affiliated with your financial institution. This one I really want to highlight because I had, now this is a personal customer, but it can translate to business. I had a personal customer. He went to the ATM probably like 4 or 5 times a week, and he was using a different bank's ATM machine. Now, that bank charged him like $3.50. And then when you use a separate ATM machine, Comerica also charges, at that time when I was in the branch banking center system, it was another 250. So every time this person went to withdraw cash from the ATM machine, he was paying an additional $6. Now, if he does that 5 times in a week, that's $30. If he does that every single, if he has that same pattern every single week for the month, now that's $120 extra in just fees that he's not aware of. And that $120 extra, you take that over a 12-month period, now you're well into the thousands, right? Or you're at least over $1,000 in fees that you're paying. So that's something that you definitely want to consider. And, when you look at your statement and you start seeing those fees, then that might be enough. Uh, that might be the reason that you really want to change your habits, because if you don't see it, it's out of our mind. We just say, hey, I need to go get this cash real quick, so let me take care of it. But once you see that account and you say, oh, well, I'm being charged for this and this and this, well, let me do something different. All right. Using a credit card, it allows you to track your small expenses in one place. So that's going to be good for tax purposes. So, if like, let's say you use your debit card for some transactions, use your credit card for some transactions, you will essentially have to combine them either into one document, or you have to share both statements with your accountant once it's time to do your taxes. So they know, okay, well, these are all legitimate business expenses and there are deductions that can be taken. And I'll say this. I haven't said it earlier, but you don't want to run business transactions from your personal account, because once again, that's going to make it difficult for your accountant to reconcile all your account. Because if you hand them a personal account statement, and you're going to have to figure out, well, and they will also, well, is this a personal transaction? Is this a business transaction? What can be written off? What is a proper deduction? So, having a credit card, that will just allow you to track all of your expenses right there on that credit card statement. But it's really similar for like business debit cards as well. As long as you're using all of your business accounts for business transactions. And then it says here, other authorized users may require access to your PIN number to use the card. And then business debit cards, they don't build credit history either. So those are just a few cons of the business debit card. But we shared the pros. So you really just have to figure out what is going to be best for your particular situation. All right, now we get into business credit cards. So a few pros. You can add key personnel as authorized users and track their expenses. You can also assign them credit limits for each authorized user. So let's say you have, you know, uh, 5 key employees and they need access to your business credit card. You can assign them their own credit card number almost, but you still have like the master number, and then you can assign them credit limits based on what you believe that they need to function. and help keep your business running. You can assign one of them a $500 limit, another one $1,000 credit limit. It's up to you. It's customizable that way. You are in control. You're in charge. I'm not sure if every business credit card company offers that, but uh, I'm familiar that Comerica and Fifth Third do. Another pro, keeping the personal expenses separate from business expenses. And I already talked about that. Uh, Also a robust rewards program. So you think about points and rewards, and you can redeem it for cash back or gift cards and things like that. So you may be able to save money on certain items just based on how you use your business credit card. And then you can also qualify for higher credit limits than personal credit cards. I've personally seen that happen. I've seen some business credit cards. I want to say the highest I've ever seen is maybe like $47,000. And, there really wasn't any additional approval that was needed. They just sat down, completed the application, and they were approved right on the spot. So it's different for different people. Is of course, dependent on personal credit as well as business credit, how long the business has been established. So there's various factors that goes into how the credit limits are determined. So a few cons. The authorized users, they're not responsible for paying the bills. It's really going to be up to you as the business owner or the entrepreneur to really coordinate how the bill gets paid and reconciled. Mishandling a business credit card account, it may negatively affect your business and personal credit. That's something that you want to consider as well. And then you also have to consider fees and interest rates. If you keep a balance on your card and you don't pay it off in full each month, then there may be interest charges that you will have to pay. And then if you go over your credit limit, if you're late paying, there will be some fees that will be involved there as well. Okay, so we have a few scenarios. And I'll just run through them real quick. You own a neighborhood self-service laundry. A few minutes ago, one of your customers informed you that you are out of creamer for your coffee machine. Do you use your business debit card or your business credit card to purchase more creamer at a local supermarket? So I actually had one of our bankers that did this presentation. This was like a few years ago. And they recommended to use your business credit card for everything just for the points. And so I had to interject, right? I had to interject and I let them know. I said, that may be a good strategy um for someone that is extremely sophisticated with reconciling their accounts. So, yeah, you put everything on your business credit card, you pay it off at the end of the month, you get the points. It sounds like a great story. But that can be a recipe for potentially overspending. Really, especially in the personal world, it can happen in the business world. But if you just put everything on your credit card and you get your credit card bill at the end of the month and you say, oh wow, I did not budget this into my monthly expenditures. You may have a problem there. So my recommendation, especially for scenario one, it's creamer, it's a small amount of money. Use your debit card. That should not make or break you. You should not be worried about, okay, this $10 creamer, 15, $20, whatever it is, that you shouldn't have to worry about going below your monthly minimum balance just by using that, right? So in scenario one, for that instance, I would recommend using a business debit card. All right, scenario two, you own a small framing shop. You've had a great month in sales, but money is a little slow coming into your account. You've paid most of your bills and are almost at your minimum required balance on your account. An employee alerts you to a great deal on packing boxes that you've meant to buy. Do you use your business debit card or your business credit card? So this is going to be a higher transaction or a higher dollar. Yeah, it's going to be a higher dollar amount transaction. You don't want to go below your minimum required balance because you'll have to pay an additional fee. So in this situation, I would recommend using your business credit card, and then as soon as you can, pay that off. So you're not worried about paying additional interest and fees and things like that. But you do want to take advantage of this great deal on packing boxes, right? So for scenario one, I say business debit card. Scenario two, I say business credit card. And and also regarding the business credit card scenario, I would also recommend keeping a budget, right? This presentation is not really about budgets, but as entrepreneurs, small business owners, you need to have a budget in place, and let that budget really be your guiding decision when you start to make some of your, your financial decisions and how you're going to proceed. All right. Now, building relationship with your financial institution. Um, I believe that it's very important to build that relationship. You really want the management team to know you, to know your business, to know what you offer, really to know what you're looking for. How are you looking to grow? What next steps of your business are you looking to accomplish? And the reason I say that is because when there are particular offerings at the bank, they might have a promotion. And you might have just told the bank manager, "Hey, I'm looking at buying a building like in the next 6 months." Well, lo and behold, well, now here's this promotion. If you were to take out a term loan, you might get a deduction on the interest rate. You might get a deduction on closing fees, things like that. So if you've just explained this situation to your banker, they're going to keep you in mind. And you might be one of the first people that they call and let know that, hey, there is this particular promotion out there, and this is something that you should take advantage of. So you know, beyond educating yourself and networking, these are really good first steps to build that relationship. But the reason is so you might have some favor at that bank. And then if you have a problem or a situation, if they know you, if they know about your business and what you do, they might be more accommodating. If there is a overdraft fee that you get, or if it's a credit card and you get charged an over the limit fee or a late payment fee or things like that, they may be more accommodating to your situation if you have that relationship. So here it says, of course, educate yourself, learn the basic services the bank offers, be prepared to answer questions about your business and its ongoing financial needs. Good bankers, when you give them that information, they're going to be able to recommend the appropriate products and services and then even see ahead. They might say, hey, this is something you're not doing now, or you don't have a need for it now, but as you're looking to grow and do this particular thing with your business, this might be something that you will need in the future. And that's just something you'll keep in the back of your mind. So network, speaking with the bank representative, network at events where financial institution representatives will likely be present, but also just going into the bank and talking to them, letting them know what you're looking to accomplish with your business. All right, that's really going to be a good best practice. So, in summary, you really want to do your research before selecting a financial institution for your business. You want to bank somewhere with someone that is knowledgeable in your industry and can help you navigate some of those pitfalls. So you don't, you're not stuck with a lot of these fees and service charges that, if you were advised properly, you wouldn't have. And then there are many different types of financial products and services available for your small business in particular. And then it is beneficial for you to build a positive relationship with your bank or your credit union. All right, so that's essentially all I have. So I believe, Andrew, I think we'll open it up for questions now, right?
Yes, absolutely. And thank you again, Kevin. That was wonderful. A lot of content packed in there, so we really appreciate it. If there are any questions, feel free to leave them in the chat, if we can answer them. Gregory, I think you had your hand raised earlier. Do you want to leave a question in the chat, or I can take you off? I can turn your mic on if you want to talk to us. I guess while we wait, I do have a question. I was wondering like what kind of different trends you're seeing that small business owners want to look forward to the banking world.
And that's a good question. I would say I was talking a lot about well, I mentioned treasury management several times. So treasury management, there is more that goes into that beyond just, paying your vendors, accepting money from your clients and customers. They also have fraud solutions packages as well. So there's something where you can get a file and, let's say you write a lot of checks. You can review all of these checks before they hit your account and you can say these are all legitimate or no, this is an issue. This is fraudulent. We shouldn't pay this. Right. And then if that's the case, then you have to shut down that account, get a new account. But I would say just having that fraud feature on your account. So, you're not looking at your statement 20, 30 days later and, oh, well, here's a fraudulent situation. It's a fraudulent check. You're getting it before it even hits your account. And then if you tell the bank, hey, this is fraudulent, it won't hit your account. That check will be denied. It won't be paid. But then you will know, all right, well, we need a new account number so nothing else hits. So I would just say utilizing the full suite of treasury management products. That's really like the big thing now.
Awesome. Thank you for your insight. It
You're
looks like
welcome.
that is it for questions for this session. So with that being said, I will end this for today. And then we look forward to having you next week as well. So feel free to join us next week, guys, on session two of this four-part with Fifth Third and Comerica Bank together. So I'm excited to get this rolling. So have a good day, everybody.
Thank you.